There we go. All right. So we start with beginning inventory. We had 130 units, each costing us $56. That's a total of $7,280 for the value of beginning inventory. Then, in February, we purchased 225 at a cost of $62 for a total of $13,950. Actually, I'll go ahead and write up the months. That was February. Then in April, we bought 350 units. That cost us $65 for each cabinet, for a total of $22,750. In June, 700 cabinets. Now they're $70 each. That's $49,000. August, 300 at $66. That's $19,800. October, 400 at $68 for $27,200. And then lastly, in November, we bought 250, and they are now costing $72 for $18,000. At that point, you add everything up, and that will give you available for sale. So total number of units is 2,355 at a total cost of $157,980. It tells us that we sold 2,200. That means in ending inventory, we have 155 units. All right? So starting with average cost. For average cost, we have a total of $157,980 that make up the 2,355 units available for sale. That's going to give us an average cost of $67.08. If we multiply that by the 155 units that we have in ending inventory, we're going to get $10,397. That's the value of ending inventory, the 155 units that we ended the year with. So what's cost of goods sold? Exactly. If you take the $157,980 total cost of goods available for sale, subtract what you still have in the warehouse, you will get cost of goods sold of $147,583. And this is ending inventory.
That's the cost of goods sold.
Yes, because once you calculate either which units did you sell, which we could have easily done that. We could have taken the 2,200 units that we sold and multiplied that by the $68 and $67.08, and that would have given us the $147,583. Once you have one or the other, subtract it from the total dollars that you have available for sale, and that gives you the other number. So you really only have to calculate one, and then it's just adding and subtracting. Yes, sir.
So the 147. That's how much we made to subtract from.
No, that's how much the dollars that we sold. Then we would subtract that from our sales revenue to give us gross margin, and then subtract, operating income in order to get income from operations.
And then when you include the 10,000, that's how much you could potentially make.
Now, 10,000 is what's going to the balance sheet. That's what's available to start next year, because that's a current asset, what you're going to sell. Question over here. Was there another? Yeah.
What is CO?
COGS, cost of goods sold. Yeah, sorry, abbreviations.
So the 147 is how much you made this year, and then the rest goes to the next year.
Is what you sold this year.
Yeah.
Yes, not what you made profit-wise, what you sold. All right? What about FIFO? So first in, first out. This is that candy machine, the little corkscrew. Not the bread, because we know that can be foiled. You guys reaching back there and getting the new bread. So what we're selling in this candy machine is what we started the year with, plus all the new stuff. So what's left? What's left is what's in the end, the last stuff that we bought. That's what's in ending inventory. So ending inventory is going to be made up of all from the November, because we have 155 units in ending inventory. We bought 250 in November at $72 each. Is that? We bought 250, we only have 155 left. That's what we have left in ending inventory. Okay? So the 155. So they all came from the November purchase. So if you extend that out, you get 11,160. That's ending inventory, the value of ending inventory. Do the same thing. Take the 157,980, subtract it, and you get 146,820 as cost of goods sold.
So you just multiply the 155 by 17?
Correct. And that gives you the value of ending inventory, because those are the units you had left in the proverbial candy machine. Yeah, all of them are going to come up with different numbers. They're all going to come up with different numbers. Yeah.
Just reading the problem, I'm wondering where it says they sold 2,200 cabinets during 2011 at 160 per cabinet.
Right, because it goes on, the very last requirement here, it's asking you to prepare a schedule to compute the second one, compute the income before taxes. So that 160 would be the revenue. But I'm not going to do that because I'm just focusing on cost of goods sold. Yeah.
Where does the $72 come from?
That's the purchase. That's what you bought in November. Each one of these 250 unit cabinets, you bought at $72 each.
But why are you spending?
Because that's what's left. FIFO you sold first in, first out. So you started selling all this. You sold 2,200 units. So you sold all those, all the way down until you got to November, and you sold 95 out of the 250, leaving you with 155. Yeah.
So if you have more in your inventory than 250, would
Yes.
you have to go into the month before it?
We're going to do that right now because we're going to do last in, first out, LIFO.
Wait, why does it matter? Why does it have to be more than 250?
I'll show you.
Because then it goes into like a month before, you didn't sell the whole month before.
Last in, first out is the big pyramid of product in Costco.
You mean if the ending inventory is more than 250?
Yep. So we've got 155 units. All right?
Which time Lifo?
LIFO. So if we're selling the newest units that we bought, what we're doing, this 2200 is all of that and all of this, so forth and so on, going up. What's left? The oldest units. So what did we start the month with? 130 units at $56, which was a total of $7,280. What does that leave us to identify? We've identified 130 out of the 155. We need 25 more. So where did the 25 come from? The February, exactly, at 62. And 62, that's 1,550. That's a total of 8,830. That's ending inventory. Subtract the 157,980 total cost of goods available for sale, and we get 149,150 as our cost of goods sold under LIFO. Yes, sir.
The only part I don't understand is the 25 extra just goes on to February, that's why it's 25?
Right, because we still have 155 left. So the oldest stock that we ever had was 130 here. We still need 25 more. So 25 had to come from this batch.
Oh, so you're just picking the next oldest.
Yes.
Oh.
Yep. And so to answer your earlier question, if we'd have had, let's say, 255 in ending inventory, even under FIFO, what would you have done? You'd have taken that 250. You had 5 left to identify. They had to have would have come out of the October purchase. So whatever you have in ending inventory, you're identifying under FIFO the newest ones and working your way up. Under LIFO, you're starting with the oldest ones and working your way down. Perfect sense, right? Yes.
So are you just trying to figure out which one would be better, or?
No. These are options. Whatever company, when they start setting up their accounting systems, they identify a system. They say, okay, we're going to use average cost, or we're going to use FIFO. And at that point, you're consistent. That's what you use forever and ever and ever. Well, you can change, but it's not easy.
So you would pick the highest number?
No, it depends on, there's a whole bunch of reasons that you would pick an inventory cost. Like I mentioned on Monday, the petroleum industry uses it because they like to get the current cost of a barrel of oil into the cost of goods sold. Overwhelmingly people use FIFO though. But they've got different business reasons for doing so. Yeah, question in the back.
Yeah, in most cases, those are not predetermined numbers, right? Those are not set numbers, those are subject to change, right?
The purchases? No. We know.
You always know?
Yeah, by the end of the year, I know how much I bought my inventory for.
You said like before a company decides what they're gonna be, they would do this, right?
They would do one of these.
Yeah, so how would they have accurate numbers?
These?
Like, would they be like,
Because we're doing this entry at the end of the year.
okay,
All All right, so we've now gotten to the end of the year. We know how much we have left in stock. We know how much we sold, and we certainly know how many we bought throughout the year.
Would we want to decide whether we do the average cost FIFO or Lifo at the end of the
No, no, that's what I was just saying. The options here, whether you use average cost FIFO or LIFO, is decided when you first set up the books for a new company.
That's what I was saying.
You make a decision, and then that's part of your accounting policy. Yeah.
It's kind of a leap of faith, but you know.
Well, you make these decisions for, there's a variety of factors that go into making that decision. Yes, sir.
So does this tell us that the FIFO, that the company should use FIFO because that's the cheapest cost of goods sold?
No, it doesn't. It's only cheapest because it's a case of rising prices in product. It will, for the most part, FIFO will be law. But you could have a product where the prices are declining, in which case FIFO would be the highest, which is very common in the technology industry. Because, hard drives and chips and all that stuff, the price goes down over a period of time. So, okay? Everybody good on this one before I go do another one? All right. Let's do the very next one, because this one's interesting because it's two. It's a 2-month problem, and it's on the next page, 319. Problem number 2. On 319. On this one, the inventory purchases and sales for product SOL, not my choice, sorry, for March and April are listed below. That's hilarious. Graduate students, graduate students do these problems. The authors write the chapter, and then they leave it up to graduate students, and they all have this crazy sense of humor. I had one yesterday in intermediate accounting that both times the long-term construction project was a dam. So all lecture long I was talking about the dam project. I'm going, it's not my book. So, all right. It closes the books at the end of each month, and it uses a periodic inventory system. So what we're going to do is we're going to calculate, once again, ending inventory and cost of goods sold, but we're going to do it first for March, because the ending inventory of March will then become the beginning inventory of April. All right? So let's start with March. We started, and the other twist is that the beginning inventory in each case is going to be different depending upon what the average cost FIFO or LIFO they choose. Now in this case, the beginning inventory of $49 is the same no matter what they have. So we'll use that, but it will change for April, as you'll see. So beginning inventory is 60 units, each costing $49 for a total of $2,940. I multiplied 60 times 49.
Oh, okay.
All right? Then we made a purchase on March 10th of 100 units. That cost us $52. That's 5,200. And then we sold 90 units. Well, so that's the end of our purchases. We only made these 2 purchases for March. Okay? So we have 160 units that cost us a total of 8,140. That's an average of $50.88 per unit. Throughout, this is available for sale. We sold 90, leaving us with 70 in ending inventory. So if we multiply the 90 units times the $50.88, we will get 4,578. Subtract that from the 8,140, and we get 3,562 as ending inventory. And you could have easily taken the 70 and multiplied it by the $50.88 and then subtract that to get cost of goods sold. All right, so this is cost of goods sold for March. Yes, sir.
$50.88, is that like the average?
Yes, that's taking the $8,140 cost of goods available for sale and dividing it by the 160 units available for sale.
Okay.
That's where we got that from.
Okay.
Yes, sir.
Sorry, where'd you get the 4,578?
Which one?
4,500.
90 times.
90 times this.
Okay.
Yeah. 90 times that equals that. All right? Everybody good so far? Before I move on to April?
I thought it was 70 times 50.
You could do either one, is my point.
Oh,
You could do either one. You could multiply either the number of units sold or the number of units in ending inventory. You're still going to wind up with the same answers, because whichever one you calculate, the other number is just subtracting it from the total. So once we get to FIFO and LIFO, traditionally you're going to have fewer units in ending inventory than you will have sold. Hopefully, if you've got a decent business model, you're going to sell more than you still have on the shelf. All right? So it's always simpler to calculate ending inventory because there'll be less of them. And once you have that dollar figure calculated, just subtract it from the total and you got the other number, cost of goods sold. Yes, sir.
So the 3,562 is the cost of goods sold?
No, that's ending inventory. Yeah, ending inventory, cost of goods sold is that. Right? Okay. So what is beginning inventory for April? The same numbers. The ending inventory for March becomes the beginning inventory in April. We have 3 purchases in April. On the 4th of April, we buy 120 units at $53 a unit. That's a total of 6,360. On April the 15th, we buy 50 units at a cost of $54. for 2,700. And then lastly, on the 25th, we buy 100 at 55 for 5,500. Add all that up, including the beginning inventory that we started with, we get 18,122 in total cost of goods available for sale. Once again, this is available. Total number of units are 340. God bless you. So we have 340, that's the 70 plus the 120 plus the 50 plus the 100. If you divide the 340 units into the $18,122, we now get an average cost of $53.30. We sold 200 of them, leaving us ending inventory of 140 units. Once again, doesn't matter which one you choose. Multiply the $53.30 times the 200 units, you will get cost of goods sold of $10,660. If you multiply the 140 units times the $53.30, you get ending inventory of $7,462. So this is cost of goods sold, and this is ending inventory.
You said for the last part, you multiply the 140 units by the average, the $53.30.
Yes. Or I multiply the 200 units that I sold by that same number, $53.30. But I want to emphasize you only have to do one or the other. All right? Yes, sir. I divided the 18,122 by the 340 units. Yep, that's it exactly.
And the 10,660.
I multiplied that now $53.30 times the 200 that I sold. Is this making sense? Because I want to make sure you got this before I move on to FIFO. All right, FIFO. We have 70 units in ending inventory. Which units are they at the end of March? Are they the units that you started the year with, or the units that you bought on the 10th of March? The 10th, exactly. So at $52 each, that's a total of, drum roll, $3,640. If you subtract that from the 8,140, because that never changes, you get cost of goods sold of $4,500. For March.
So that 8,140 was the available balance in
Available for sale.
Oh,
That was the total dollars of goods available for sale. That was every dollar you have invested in this unfortunately named product. The SOL product. Maybe it stands for soul. Isn't there a beer called Soul? Yeah, C. Uno cerveza, por favor. Travel all throughout Mexico with that one phrase. Been everywhere. Never had a problem. All right, so now in April, you have to recalculate because the ending inventory used to be valued at $3,562. Now it's $3,640. So in April, we have to start with the $3,640, add in the $6,360, the $2,700, and the $5,500, and add all that up, and now we get, let's see, beginning inventory, there we go, 18,200. We still have 340 in total. That doesn't change. Only now it's worth 18,200, not 18,122. We also still have 140 units in ending inventory. Actually, let me move that down a little bit. That's what's in ending inventory. Under FIFO, which units are they? And you can still use this table over here because this data is unchanged. No, FIFO, the first in, first out, so the stuff that's in there is still in ending inventory is the newest ones we bought. The 100, exactly. So we have 100 that cost us $55. Yes, exactly. You guys are getting this. And we got 40 left, and that had to have come from that 15th, April 15th purchase at 54. And that's 2,160. That's a total of 7,660. We still have 18,200 in total. So cost of goods sold now is 10,540. Not a problem. Right?
So where do you get those? Where do you get those values again? I see where you.
These, it's from here.
Yeah.
Right here, here, and here. But that one came from there. That one came down. That's the total of those two, adding those two together. So that's ending inventory, the value of ending inventory.
You said 7,600?
660 is the value of ending inventory, leaving us with 10,540 as cost of goods sold. Yes, sir.
So all those numbers that we used to get the 18,200, where are those exactly?
Right here.
Oh, they're just
Yeah, I just moved them over.
Oh,
Yeah, because those are unchanged. The value of each purchase that we made throughout the month of April are the same. Yes, sir.
So the 140 left over traces back to where'd you get the? You know how in the other example, the 25 went to February. Like what do you do with the 140 here?
That would then carry over. That's ending inventory, so that would be the beginning inventory for May.
For May.
Yeah,
And that's what you do with the 140 over there for the.
that's right there, exactly.
So wait, why do you do, where do you get the 55, 54? Oh,
Out of these, we have 140 units left at the end of April. So which units are they? The 100 that we bought on the 25th at $55, and then we've got 40 more to identify, so it's 40 out of the 50 that we bought on the 15th that we paid $54 for. Lifo? No. No option whatsoever. It's nice of you to ask.
Never hurts.
You betcha. All right, so we have 70 units in ending inventory. Under LIFO, which units are they? The beginning, we had 60 units. That cost us $49 each.
Lifo begins with the oldest unit.
These are the first things you start with.
The oldest ones are still in ending inventory. That's that pyramid at Costco. Because every time you get new inventory in, you just take it out there and build it back up. And then as the customers come in and buy it, they're taking the stuff off the top. So the stuff on the bottom is always there.
They did 10 at $52, right?
Yep, and so we've got 60 at 49, that's 2,940. And then we've got 10 left, so that had to have come from the March 10th at 52. And that gives us 520 for a total of 3,460. We still had 8,140 for the month. So ending inventory is then, I'm sorry, cost of goods sold is then 4,680. And that's, well, cost of goods sold. April. All right? So we got to do the same exercise. Beginning inventory. Oops, don't want to put it way over there.
You should always start by running the month, right?
Huh?
You should write March in the first part too, right?
Yeah, this is March. Well, I got it over there. Yep. So beginning inventory was 70 units at a total cost of $3,460. Then we got to do this same thing. Got to take those three purchases that were made in April, 6,360, 2,700, and 5,500. And add all those together, and you're going to get a total of $18,020 as goods available for sale. So ending inventory is 140 units. Move that down a little bit.
Initially, you would take 120 at $53
Where?
from April
No. Where are you going to start? You're going to start with the oldest inventory that you have in stock. What's the oldest inventory that we still have at the end of March?
We have 90 at $52.
Well, we still have all this stuff, remember? So we start with the 60 at 49. That's 2,940. We still have 10 at 52. That's 520. So that's 70 out of the 140. So we have 70 more units to identify out of the stuff that we bought in April. So where did those 70 units come from?
April 4th.
Exactly. So we have 70 at 53. And that is 3,710. Add all that together, you get 7,170. Subtract it from the 18,020 total cost of goods available for sale, and we get 10,850 as cost of goods sold.
So why do we use the 16 and 10 for March? For the April?
Because we still have them. They're still sitting there, even though we started the month of April with a month of March with them. They're still on the bottom of that pyramid, all crushed up and dirty and kicked, and nobody wants them. What's that? Oh yeah, you were answering.
Inventory of the last month is the beginning.
Yep, is the beginning inventory. So that was the beginning block that we had available throughout the month of April.
Just wondering, should we, just to, I don't know, just to keep it neat, would we want to write in, which is under April beginning inventory 70, we want to write in all the 120, the 50, and
You can.
All right, just want to make sure it's
Yeah,
possible.
you certainly can. Yep, however you want to organize these, certainly.
Kind of like,
And I'm not going to give you a 2-month problem on a midterm. I'm not that mean. But, so, yeah, exactly, yes. Yeah, go ahead.
Could you just go over one more time about
Yep.
60, 10, 70 for the Lifo?
Okay, so at the end of the month of April, we have 140 units in total. So that's what we have in ending inventory. So what we're trying to do now is identify which ones are those. So they're always going to be the oldest ones that we have. Well, the oldest ones were 60, that dates back to the beginning inventory for March, plus 10 that we had left over at the end of March. So that's 70 of them. And then we need to identify another 70. Well, the first purchase that we made in March was on the 4th, in April, was on the 4th. We bought 120 of them at 53. So that's the last block. Yes?
we double line that one too?
Yeah. I always double line my answers. Questions on LIFO, FIFO, and average cost?